Hi everyone, welcome to the Joyful Investors channel. In this new series, Pride and Joy, we'll be inviting special guests who are financial practitioners and investors to share their views on some money and investing topics and how they manage to find pride and joy in this process. I've invited a special guest today. He is someone who has been financially independent from the age of 39. At a young age, he has accumulated enough investment income to sustain his lifestyle, quitting a regular paycheck at age 39. Being exposed to the vagaries of IT outsourcing when he was in tech, he redesigned his lifestyle towards decoupling work from survival. With a great interest in personal finance, lifestyle design, and philosophy, he combines his qualifications in engineering, finance, and law to solve financial problems of the modern age. He believes in taking a multidisciplinary approach towards dividends and cryptocurrency investing. And he plays Dungeons and Dragons during his spare time.
Hi.
Hey, welcome Chris!
Hi.
How's it?
Hi.
And today we have with us Chris from Tree of Prosperity.
Hello.
Right, so we have Chris with us today, and your expertise is in dividend investing. So we definitely have to hear more from you on your viewpoints on dividend investing.
Alright.
Right, but before we jump into that, just as a quick start, perhaps you could share with us more on how and why you started your blog, Growing a Tree of Prosperity.
Okay, so I was an internet troll in the 1990s in this precursor to NUS Whispers called NUS.talk.romance.
Okay.
And subsequently, I continued trolling in the Young People's Action Party bulletin board system. My blog was started because as I mellowed down and I got older, I realized that the combination of real government data and facts have actually a larger impact on the people who read them. So it also helped that I started studying finance at the time. Yeah, and so if you were to come to my blog and you look at the top 5 postings, you will see nothing but extremely politically incorrect material. Yeah, and that's basically how I started on this journey.
What I find really interesting about your blog is that you're not like the typical financial blogger, right? Because I saw that you can always try to bring in a non-financial topic and then you mash it together with a financial topic and bring about some very interesting insights. Like I remember there was this one which I read on how trying to be financially independent can leave you forever alone. And I thought that's really interesting and it gives readers a really refreshing perspective. Yeah. So other than this, you're also commonly being seen as a dividends guy. So what was your thought process as to how you arrived at being more on the income investing side as opposed to the growth investing side? What were some of your considerations that you had?
Okay, so my origin story is that I grew up in a very retail kind of household. My dad basically was one of the founders of probably the largest pet shop franchise you see in Singapore today, and he's a founding partner. And one of the more negative aspects of growing up in a retail household is that sometimes your sales do not meet the target. And my parents would actually fight because there isn't enough money to pay the landlord.
Oh, I see.
So because of that, I would grow up with this complex about landlords and paying rent. And so whenever possible, I position myself as a landlord instead of a tenant. But of course, over time, after studying finance, we do not limit this to real estate, even though I would say real estate is a large part of my holdings, right? We're also interested in things like fiber, in shipping, and now even with stable coin, cryptocurrency, yield farming techniques. Yeah, so I have a very dividends kind of orientation because of these formative experiences when I was a child.
Because of the growing up
Right.
experience.
Yeah.
Right, so I see that it is the growing up experience that kind of led you to choosing to investing in REITs and investing for dividends. So on the topic of dividends, today we have prepared a few common perceptions that many income investors have on income investing. So we're going to have you to share your viewpoints or perhaps even just debunk some of these common perceptions on income investing. So the first one on our list is dividend investing is only for the older retired investors. What's your take on this, Chris?
In my work as a financial trainer, we backtest financial strategies, and right now, putting a dividends tilt to Singapore-based portfolio would result in superior performance compared to the benchmark, which is the SCI index. Right? As such, I don't think you should invest in a dividends portfolio simply because you're a baby boomer or because you're older. You invest in a dividends portfolio because it is profitable to do so. Now, granted that that is the case, now I am aware that dividends investors do tend to be more stubborn and they like to hold on to their investments for a much longer time. But there is an added effect in that when there is a downturn in the markets, you will find that the dividends investment holds out much better. And on top of that, there is the added bonus that when dividends arrive in your bank account, you don't have to sell your stocks like in a growth portfolio. And so you save money on brokerage as well.
Right, so I guess it depends on the investing style that resonates the most with you as well. A lot of times we may generalize to say that, okay, if you're younger, if you have a longer runway, then you could look more on growth investing. But I guess it still depends on the style that you feel the most comfortable with, because after all, investing is a very personal thing. Right, so the second common perception that I want to talk about today is that dividend stocks are always boring. They are not as exciting as NFTs, crypto, or super growth stocks. Over to you, Chris. What do you think about this?
I teach a course on cryptocurrency for conservative investors and on early retirement. When we actually show our students how to invest, we don't really invest based on excitement per se. Instead, what we do is we invest based on yields. Specifically, we go for risk-adjusted returns.
Okay.
Right? We want investment strategies with the highest returns as well as the lowest risk. Right? So when you do this, I would say that whatever we do is hardly exciting. And on top of it, if you were to look at an example of a strategy that I'm working with right now, the stablecoin portfolio strategy, where the underlying investment in stablecoins is pegged 1-to-1 to the US dollar. And with that kind of arrangement, right, there is no way you can get excitement out of it. Right? However, when you actually put your stablecoin investments in something like Anchor Protocol, where your underlying yields could go up as high as 19.5%, right? Now, these are very exciting yields, but of course, most of the time we're trying to figure out whether these yields are sustainable, right?
Yes,
So I teach my students to read the news, to follow what's happening with Terraform Labs, to find out whether, based on the latest governance votes, these dividends are actually sustainable. So there is some excitement when it comes to that. But of course, when it comes to excitement, it is a double-edged sword, right? For the growth investors who have invested in the Chinese tech stocks and the US tech stocks, it's exciting in the wrong way recently, right? Yeah, and so I think when it comes to it, my constituency that actually has people in their 30s, their 40s, and their 50s and 60s. We do want our investments to be as boring as we can, right? Because we have day jobs, we have families to look after. And so our risk appetite might not be the same as someone in their 20s who YOLO, you could put your entire net worth of $500 into Dogecoin. Okay? Yeah. And my only advice for young people is that if you really want excitement in your lives, then play a game like Elden Ring, right? Buy a PS5 to do that, right? That's where you get your excitement. You want your investments to make money for you, to pave the way for very comfortable early retirement, preferably. It should be boring, it should be predictable, and it should work.
Okay. Alright, so excitement, we leave it to non-money related stuff. Then when it comes to our personal finances, right, it is still all about sustainability over the long term. Right? And I do feel that there are just different kinds of investment types, and we cannot just compare them like this. It would be as good as asking, hey, is an apple better or is it a strawberry better? but actually they provide nutritional value in different ways. Okay, so down to our last common perception, which is that dividend stocks are always safer. They are the ones that can still hold up during the bad times. What do you think about this?
Okay, so generally speaking, when you tilt a portfolio towards higher yielding stocks, the standard deviation will drop slightly. So historically, we have evidence to show that it is indeed safer,
Okay.
right? However, dividends investing is not a panacea to your investing yields because whenever there is a downturn, generally speaking, we will lose about 80% of what the greater market would lose.
Okay.
So we will lose less. It doesn't mean that we will not lose. And specifically on March 2020, when we were having the pandemic, I would say that for that just 1 week on March, dividend investors had a heart attack because we've lost more money than the benchmark.
Right.
Yeah, and it's something that's sort of left an emotional scar, and I like to talk about this. Right, you still need to be mentally prepared for all these black swan events that could happen. But I would say that overall, it would still be generally safer for conservative investors in that the incoming yields and the lower losses combined over a longer period of time makes it a very attractive and defensive form of investing.
I see.
Yeah, but I think it's important to understand that it doesn't happen for all periods of time.
That's right.
Yeah.
Right. Alright, so you come across to me as someone who's a very logical guy, someone who will base your decisions on hard facts and hard statistics. So when it comes to investing, maybe you can share with us, so how do you go about managing your emotions for your investments such that you don't let them cloud your investment decisions?
Well, I'm still a human being and I'm still subject to the vagaries of the financial markets. Alright, when Russia invaded, I found myself in a difficult position because my portfolio was very much risk on. And so emotionally, I was feeling the same kind of turmoil that many investors are facing. So what I did was there were some high beta investments I have on my leverage portfolio and I liquidated it. Then I observed, I waited for the market to digest the news of the invasion, and when the parties sat together to discuss the first round of ceasefires, I was able to get back at a much lower cost. So the truth is that we're all affected by these events. And I think the most important lesson is, if you do not want to be affected by your emotions, then simply do not leverage, right? But for me, 15% of my net worth is in a leveraged portfolio, right? But I think I'm in a fairly safe position as my unleveraged portfolio generates about 13 to 15,000 a month to support my family expenses. So it's not exciting, it works, and I think it provides the basis for a very, very calm and stable kind of family life. So this way, whatever happens in my leveraged portfolio, I limit the amount of damage that it does to my family.
Right. So that life can still go on.
Yeah. Right.
Okay. Many investors, they're always in search for the best strategy out there, right? But it could also be a case where some are not doing well because not because their strategy is lousy, but because they did not manage their emotions and psychology, which resulted in them making decisions that derail their initial investment plan. So managing emotions is something that's really important when it comes to investing, right? So most of the time on my channel, I focus a lot on emotions like fear and greed, right? But for today, I want to zoom in on something different. Another aspect of human nature, which also impedes the way that we manage our finances and investments, which is that being too eager to do well financially so that you can match up with your peers. Or in other words, this comparison game, this status game. So Chris, have you ever felt that you got drowned in this comparison and status game before? And I must earn more than my friends, or I must do better in investments. And how do you eventually overcome it?
Okay, now I think listeners need to accept one fact of life is that status games exist in every single society on earth, right? We're particularly status driven in Singapore, but the truth is that if you're not in a game comparing yourselves based on money or power, there are also status games based on virtue as well, right? And that's how religious organizations are born, right? I definitely couldn't extract myself out of this status game. Because for one thing, I'm an extrovert, and extroverts need an external form of validation, right, for our identity and our self-esteem, right? So how do you actually deal with this, right? When you're working in a multinational, you have colleagues who might get a better grade than you, and over time there'll be people who do better than you. Of course, there'll be people that will do worse. How do you deal with that, right? And so the method which I've developed in my 20s was that I can't possibly win the corporate rat race, because to win, it requires a lot of psychic energy, it requires a lot of energy to do that.
Yeah.
But if I'm able to save a very ridiculous part of my income, 50, 60, 70% every year, and I put it in the dividends portfolio, my salary would be supplemented by another cash flow from the financial markets. And so over time, I've got situations where aggressive go-getter colleagues were to say, so Chris, how much money you're making, right? And the truth is that guys are always like that. We're always trying to compare ourselves against each other, right?
Oh, okay.
And even if you don't bother about it, maybe the women who are interested in you when you're single, they will also compare you with other guys, right? And so after a while, I developed a very simple defense. I would just say, well, are you talking about my monthly income inclusive of all my investment income or not, right? And there are certain points of time where my income along with my earned income would be about 150% to 200% of a top performer in my company.
Oh, okay.
And that's when you realize that, after a while, once you get a reputation, you've authored some books on personal finance. I guess people leave you alone. And I think, I think we gotta develop these multimodal approaches to dealing with status anxiety. And we just have to live with the fact that people are going to compare. Like even in Chinese New Year, your relatives are going to compare and make life difficult for you, right? Like this person's a medical doctor. What are you doing? Why are you doing IT? So that's a very Singaporean kind of problem.
So you think that this status game and all this comparison thing, it's just part and parcel of life, and it's something that we have to try to learn to manage it.
That's right.
So I think that's a very interesting insight from you, and I really like your response, because it's not a politically correct kind of answer. But what I can draw out from your sharing is that I think personality does play a role in this, right? So for your case, you learned that so this is something that I have to accept, and I'll just go with it. But I think there are perhaps a group of people who they think that this is really too hard for them to take. They prefer to just lead their own lives as long as they're doing well, and that's good enough, right? So I think at the end of the day, the whole message is that learn to manage it, based on your personality, do it the way that can help to propel you forward in your life. Right, then what do you think about flaunting of your wealth on social media? Right? Because over the years, right, with the increased usage of social media, more and more people actually take it to social media and then flaunt their wealth, or they try to really showcase this kind of perfect life that they are leading. So what's your take on this? And do you think that actually wealth in life is not just about financial wealth, it extends beyond just financial wealth?
I think the flaunting of wealth is not wrong. It is actually very normal. And the flaunting of wealth is actually part of this thing known as evolutionary psychology, right? Especially you have this problem with a lot of young males. I was single once. And how do you signal your attractiveness as a mate, right? There has to be a method to do that. If you look at the animal kingdom, you realize that the male peacock has this very, very wonderful array of feathers.
Yes.
And they use this to attract females, right? So similarly, you can expect the same kind of behavior these days. You observe young men when they go on Tinder dates, they brag about their cryptocurrency trades, right?
Yes.
So I really don't want to position myself as blaming this method of flaunting your wealth as something that's very negative. You really can't change human nature, right? What I do recommend is that I think it is very, very unhealthy to reduce your life to a single number. Like for example, if people are going to rank you based on salary, then there is no incentive to be, for example, a paramedic or a nurse, because doctors will always make more money, right? And society probably would collapse, right? So if you want to protect your self-esteem, then you need to find some other area in your life where you can also have a significant and meaningful contribution, right? If you strip away all this thing as an investment trainer, as a dividends investor, I'm fundamentally a geek. I play a lot of Dungeons and Dragons. I watch a lot of anime, and that's a method for me to cope when I was a single guy, right? So I recommend that just take it as something that's very natural to flaunt, but remember to also diversify your sources of self-esteem.
Okay.
If it's going to be focused on your career and salary,
Okay.
you need to be very careful because the moment you lose your job, your self-esteem is gone, right?
That's it.
Yeah, and that's a very, very bad thing that can happen.
Right, so wealth in life is not just about the financial aspects. We also have to remember to also focus on some of the non-financial aspects that can help to enrich our lives. Right, so bringing this back to investing, what is something that's more worrying to see is that because of this desire to become more financially successful than your peers, some investors, when they see that their stocks are not making them money within a short time frame, and they'll think, oh, I bought the wrong stock. Or they might jump to conclusions like, oh, I trusted the wrong financial advisor, I placed my money with the wrong robo-advisors, or I learned from the wrong investment trainer, things like that. When in fact, we do require some time before the investments can actually pay out according to what we want to see. And before we end off today's sharing, what is one advice that you would like to share with our audiences on how we can stay joyful in our investing journey, despite all these volatilities?
Actually, Singapore dividends investors are experiencing a lot of joy right now because they're not really affected by the rising interest rates and the war in the Ukraine. The only piece of advice I have is that don't get fixated on investment returns because investment returns could hit you really badly if your volatility is very high. So we always go for things like risk-adjusted returns, right? Adjust your returns with standard deviation.
Okay.
And this will allow you to deal with different parts of the market cycle, right? And of course, more importantly, let's try not to invest too much of our identity into the financial markets. Like I said, have some hobbies and build some kind of personality that is really not so dependent on the amount of wealth or net worth that you have.
Right.
I think that's probably the best advice I have for people to be joyful.
Right. Thank you, Chris. It's our pleasure having you here with us today. Thank you for taking the time to come on our Pride and Joy series.
All right. Thank you.